So how to use equity from your own home to invest in property, coming up. Welcome back, my name is Marco. I'm a property investor, developer and mentor. And today I'm talking about how to use equity from your own home that you live in to invest, say, in buy-to-let investment property. So before we get into this, what is equity? Well, really simple. Equity is the value of your own property today minus the mortgage that is outstanding on that property. And if you don't have much left on your mortgage, then of course you're going to have quite a lot of equity in your property. And today we're going to go over an example and break down the figures on taking money out of your living home, your residential home, and investing that capital in investment property. And we're going to see how this can help bolster your income. So that's what equity is. And now we're going to see if it's a good idea to take some of this equity out our own home that we live in and invest this in investment property. So here in the UK, we're almost brought up to pay off our mortgage as soon as possible and become debt-free. Now, there's good debt and there's bad debt. And normally a mortgage is a good debt because in the UK, property prices tend to appreciate over time. And providing you bought this property for a good price and it's an area with a strong capital appreciation, well, actually having a mortgage on this property is a great way to benefit from the capital appreciation long term. Anyway, enough said there. But I'm going to propose a slightly alternative idea here where the aim really isn't to pay off your mortgage as soon as possible and become debt-free. Actually, we want to have good debt in our life and work in a smarter way and work less and make money work for us. So by taking the equity out of our own home and investing that in investment property, the profit and the income we're generating from the investment property is far greater than the increased mortgage cost because we've taken out a mortgage on our own home. And I'm going to come on to an example very shortly. Now, I'm in no rush to pay off my mortgage. In fact, I'm purposely trying to pay as little as possible of my mortgage. Yes, I'm in my 30s, so it's slightly easier to do this. I've got a lot of time to think about how I'm going to exit off that mortgage now. Now, of course, the nice thing about this is, let time do its magic, as I've already alluded to, in another, say, 30 years' time, that property is going to be worth far, far more than what it is today. And simply by selling it at a much higher price is one way that I can pay back the mortgage on that property. So let's go over an example now on how we can remortgage our own house that we live in, pull out those funds and invest those in investment property, say buy-to-let property. So let's go through a real world life example right here, right now. So let's assume our property is worth, say, £250,000, which is about the average price of a property in the UK. Now, of course, this depends really where you are. As we know, there's big discrepancies between the north and the south when it comes to property values. But let's work off this £250,000 figure because it is the average figure. Now, let's say for whatever reason, actually, we've nearly paid off our mortgage. So in fact, we've got all this equity in the property. And I remember equity is the value of the property minus the mortgage. So let's say the mortgage is more or less paid off. Well, actually, we've nearly got £250,000 equity within this property that we could potentially take out. Now, we couldn't take out all of that, but we could quite comfortably take out a 75% of that, and take a 75% loan to value mortgage. Now, let me just define what a loan to value is. So let's say the property is valued at £250,000 and we want to take out 75%. So the loan we're asking is a 75% loan to the value of the property. And 75% of £250,000 is £187,500. Great, so we can take out, say, £187,500 from the bank or from a lender that's willing to lend on our property. Absolutely great. And we can reinvest this into investment property to generate a far, far greater income than maybe what you're earning today. Now, first of all, let's just work out what this mortgage is going to cost us. We've just assumed we've remortgaged our own property. We've taken out this loan. How much do we have to pay the lender for this privilege? Well, that's a really good question, and it all depends on interest rates. So at the moment, as I'm recording this in February 2023, interest rates are slowly coming down from the craziness that happened in September 2022. And at the moment, there are some really interesting offerings in the market. So Virgin have just released a 10-year mortgage product that they've priced just below 4%. So this gives you a rough indication of where lenders think rates could be in the next 10 years. Now, if we could use 4% as a very safe interest rate, but actually you may be able to get better rates than 4%. So we're borrowing £187,500, say we're borrowing 30 years, and we're also repaying the capital on this mortgage, so it's not an interest-only mortgage. This is our property, our own property that we live in. Of course, you can get interest-only mortgages for your own property, but they're a little bit harder to come by. So the monthly payment on this mortgage is roughly about £900. So it sounds like a lot of money, but let's see what that £187,500 can earn us in income. And once we minus this from the increased mortgage cost that we now have, what does that leave us in terms of profit? And let's find out right now. So let's do some really basic and quick math. So we've got this £187,500. Let's say we invest this in property. And I'm going to combine both the rental income and the capital appreciation together. We're going to make the maths really simple, really easy, but realistic. So let's say we're getting, say, a 6% net rental income on our investment. And then from the capital appreciation side, maybe let's say we're getting 4% on average per annum. So pull these figures together, 6% plus 4% on an annual basis, that equals 10%. So let's say the money we're investing will give us on average a 10% return every single year. Now again, what is that figure? Well, if you look at that on a monthly basis, that £187,500, so that will give us a monthly income of £1,562. But we also have this mortgage cost to pay for in the first instance, which is £900. So we've got £1,562 through income per investment property minus the £900 that we have to pay the mortgage lender. Well, we'll walk away with profits £662 per month, simply just from pulling out the money and the equity in our own living residential home and investing that in property. Now, the beauty about this is that I've only assumed a 10% return on capital, 10% per annum, based on the lump sum we have invested. It can be far, far greater than this. So obviously, if you can achieve higher than 10%, 15 or 20%, something like that, then all of a sudden your monthly profit that you're making from the money you've invested in property minus your mortgage cost is 4 figures plus. So you can see how quickly you can potentially scale this. This 6, 7, maybe even £1,000 you're making per month profit. You can save this aside. Then maybe every 2 years you can buy another property as well. And this will help you again further scale your property portfolio. You'll be benefiting from capital appreciation, but only putting down a small deposit on your future purchases. So this is an example on how you can pull equity and pull cash out of your own home, invest it into property, and make that money be working harder. Money will work for you. And even if you're only getting another £700 per month, that's better than zero. And maybe that will allow you from going, say, full-time to part-time and having an easier life, more freedom, and doing exactly what you want to do. Now, if you're still struggling to understand the concept of equity and the cash that you have in your house, shoot me a message. I'm more than happy to help. I can run some calculations very quickly, but we can potentially see what we're looking at here and how much money you've got to, say, invest in investment property and what that potentially could earn you in income. So, I'm very passionate about helping people out in property. Not a lot of people know about this trick, know that you can use the equity in your own home, pull that equity out and reinvest that in, say, buy-to-let property or other property strategies. So for those of you that watch my channel, every Tuesday and Thursday at 2 o'clock I release a full-length video. So do subscribe for that. And YouTube tells me the majority of people watching the channel are not subscribed. So do me a favour, it does mean a lot to me. Please do consider subscribing to the channel. I've got some really good content coming out really soon, original content, stuff that's very particular to the deals that I've undergone in the past 10 years and how I've developed a very successful property portfolio. So thank you very much for watching, and I wish you all the very best in your property investing day. Goodbye.